sort of 10 years of global markets experience in the US and India. See, what always sort of drives you is the ability to create a difference. After 10 years, you're reasonably comfortable in terms of your financial journey.
And comfort is the word. I think it's just about
right. But when the peer-to-peer guidelines came out, they were fairly restrictive. So I think the initial challenge was just to sort of pivot the model and then apply for a fresh NBFC license, which also takes a year. And then thereafter was getting the seed capital for the NBFC, which really appreciate. There was the first round which IPB participate led in 2021. So that was a turning point for the business that sort of really get us going.
Every large startup starts with a problem that is faced by the founding team themselves, or somewhere where you have yourself realized the pain that someone is going through and you set out to set that right. So tell us a bit about, for you, how did the idea of LoanKuber occur, right? And how did exactly you decided to get into this space? Hello friends, welcome to Beyond the Pitch, an initiative by Inflection Point Ventures IPV. This is an initiative directed at knowing our founders well, the startups that we have funded, the founders that we have worked with closely. We need to understand their journey. We need to understand how they have gone about tackling a problem. And I'm sure this will be inspiring for a lot of our users, investors, and wannabe founders as well. So today we have one such founder with us, Saurabh Nagpal. I have had the pleasure of working very closely with him. Saurabh is the founder, CEO of LoanKuber, one of India's largest loan financing NBFC, and something that they are doing not only commercially well, but also bringing about a difference to overall society and the larger problem or the noble cause of financial inclusion. Saurabh, welcome to Beyond the Pitch.
Thank you, Mitesh. It's a pleasure. Thanks for having me here.
Always a pleasure to be talking to you and understanding the story. But I think for the benefit of our viewers, if you can just quickly talk about what exactly LoanKuber does.
Sure, Mitesh. So at LoanKuber, we're solving the problem of enabling mortgage finance for nano SMEs. So these are very small businesses, typically, where their monthly incomes range from 25,000 to 40,000-50,000 per month. We call them nano SMEs because they're a couple of notches below the classical micro SMEs. And they've, traditionally struggled to get formal mortgage finance because, most of their business happens to be in cash, or, the kind of properties that they stay in typically are not financed by banks and large institutions. So we are really helping them get the investment capital for their business.
Very, very interesting model. And since I've seen this evolving over a period of time, Saurabh, if you would also like to throw some light upon the overall ecosystem that today you operate into, right, which is the larger ecosystem of the microfinance or overall NBFC lending, not only loan against property, but housing loan and other things. So what's the problem that we are exactly addressing in this large space otherwise?
Sure. So, if you look at the overall credit market, obviously India, we are a credit starved nation, but it's also, fairly sort of competitive market. And to my mind, there's sort of two playbooks to succeed. One is predicated on scale, where, you do multiple products across a spectrum of ticket sizes, 5 lakhs to 5 crores, and you it in multiple geographies. And the second that, we are doing at LoanKuber is kind of, exactly opposite. So one is scale, the other is focused. So we're really focused on one particular segment, which is what we discussed, the nano SMEs, and, the vision is to build the SDFC for nano SMEs. So our ticket size is, it's very sort of, focused between 3 lakhs to 7 lakhs. On what we call as micro labs, which is loans only backed by self-occupied residential property. And as of today, we operate in 3 states. And we are looking to, having sort of perfected the underwriting in this space, now we are looking to sort of build out and scale. So I think that essentially two play. So, either you have a very large sort of a balance sheet play where you start with 500,000 crores of capital, do multiple products,
right,
and other is the sort of a laser singular focused sort of approach that that we have adopted.
That's great. And before we get into the model a little bit more and understand the intricacies of it would also be helpful for our viewers to understand the journey. So, Saurabh, as we always say, every large startup starts with a problem that is faced by the founding team themselves, or somewhere where you have yourself realized the pain that someone is going through, and you set out to set that right. So, tell us a bit about, for you, how did the idea of LoanKuber occurred, right, and how did exactly you decided to get into this space?
Sure. So, my background has always been in finance. So, started my career trading mortgage securities in Wall Street in New York. Moved back to India in sort of 2008 with Lehman Brothers, which, wasn't great timing. But that sort of eventually led to, joining Religare 5 years later. At which point they were sort of setting up their affordable housing finance business, and I was deeply involved at a strategic level in setting that up. And coincidentally, then we had sort of got a domestic driver for the first time. So, essentially in the US and all, you typically drive your own vehicles and all. And he was looking for a home loan, and sort of there's a classic problem. He's getting his salary in an account in a bank account. So bank had access to that account, and they could see the cash flows. They knew it was a secured loan, which is it will be backed by a property. Still, he wasn't sort of able to get a loan from the bank where he had a salary account. So that sort of just opened the eyes in terms of the opportunity, and the large sort of unpenetrated white space in mortgage financing.
No, so well put. I think we often see that there is a large segment of banks or NBFCs who are flushed with funds, and they want to fund people. They want to fund people who probably don't need funds.
Exactly.
This segment of
Right.
consumers or borrowers who probably are worthy in some way, but just can't justify with proper paperwork and the overall bureaucracy that the credit system is plagued with. So very, very noble idea and very interesting idea. Now, since you spoke about your US journey, so I'm getting a little greedy. Maybe it will be worthwhile to understand your background. How did it all started? How did you talk us through about your upbringing, about your academics, and finally you went to IIT Delhi, again one of the
Right.
premier institute. Then you went to NYU. So how has been the overall journey so far? I'm sure when you set out to do a business or start any startup, or for example LoanKuber itself, you may have had several opportunities elsewhere as well. So just take us through the overall journey from your college days.
Right. So IT was, I think most of the learning was I saw outside of the classroom. So IT, what happens is, that sort of the what you call the semester is very intense. You have two minors and a major within a span of 4 months. You're obviously studying with the best and the brightest in the country, and at any given point of time, there's sort of multiple activities which are happening.
Right.
And sort of what you learn is to sort of juggle and multiple things at a single time, and not be overwhelmed. So there are, I think, numerous instances where you used to come back at 1 or 2 o'clock, study for 3-4 hours, and then give your minor the next day with 3-4 hours of sleep, and then try to be in the top 20 top quartile 20-25%. So the idea, and that hustle, and that sort of that becomes a part of you. I think that's really helps you just prepared for the entrepreneurial journey, because at early stage it's very similar. There's something else which you have to fix it. NY was actually the opposite. So it was
Okay.
it was mostly about the classroom. So you really understood the foundations of computational finance, mathematical tools that sort of help price derivative securities, and the risk pricing models, and that I found very interesting. Also, I think, see, one thing in IIT is that sort of the coursework is slightly abstract. In
Right.
NYU is sort of Wall Street is next door, so you can, and there's a very close industry partnership.
Okay.
So you could sort of immediately see the direct impact in industry of the academia. So it was less about networking, and the global perspective was obviously there, but I think
More of a classroom.
more of a classroom, which I enjoyed.
And as you look back now, what left a greater impact on you today as you implement some of these learnings in your own business and all? Uh,
I think
the
both.
Indian
I think
learning, the global
so.
learning,
Yeah. So I
both.
think IIT, that hustle, not being overwhelmed, just sort of managing 10 things at the same time, which is required in entrepreneurship. And NYU really thinking about the risk from a mathematical construct in terms of probabilities. And, if you're in a principal business, in a business where you're, managing risk, that is very sort of important to
So
be
the
able
entire
to in
mental
some
wiring of
framework
the,
quantify,
yeah,
what
the
could be the
overall
worst
framework
case.
around the
Right,
business.
right. So,
No, I'm sure
yeah.
that would have been a great experience. You mentioned about entrepreneurship and all, and who better than you now to probably take few of our viewers who are wannabe entrepreneurs or founders. Have you seen the startup ecosystem evolving? You started probably say almost 6 years ago, and startup world was not so exuberant about funding ideas like this, right? Which is somewhere on the borderline of actually catering to a financial inclusion start, and commercial success of this might have been questioned. But generally speaking, about starting journey as an entrepreneur, if you can just share your experiences, how tough or challenging it was to set up the business and then look for investors and clients and setting up the entire team.
Right. No, I think at different stages there are sort of a new set of challenges. I think the unexpected challenge sort of early on. So we started, as you know, with a peer-to-peer platform, which we thought would be at a similar place in terms of regulations with the the CAT 2 NBFCs. But when the peer-to-peer guidelines came out, they were fairly restrictive. So I think the initial challenge was just to sort of pivot the
Correct.
model and then apply for a fresh NBFC license, which also takes a year. And then thereafter was getting the seed capital for the NBFC, which
Sure.
really appreciate. That was the first round which IPB participate led in 2021. So that was a turning point for the business that sort of really get us going. And now it's at the current scale, it's about attracting top talent with a brand which is fairly relatively new.
Sure.
Uh, so I think when so if you enjoy the journey, and I think after COVID we were sort of, as the business had taken a very downturn, and I think one is persistent and builds for the long term. I think eventually the markets, India is a large market, so eventually you will succeed. Could take sort of a slightly longer, but I think that you have to be on the pitch and playing the game. I think
Correct.
that's the foremost thing.
But
I think don't
overall,
be on the sidelines. I think as long as you're in there sort of hustling, I think you'll eventually get there.
no, sure. And having the benefit of hindsight of knowing you personally for at least last 4 years and all, I think one question that always comes to my mind for founders like you is that so there is one breed of entrepreneurs who are actually just fresh out of college, bustling
Right.
with energy and nothing to lose. Probably
Right.
they can afford a stint or two, maybe a couple of failures in life. Vis-a-vis, there is this breed of entrepreneurs like you who have been there, done that, have had corporate stints as well, right? And probably could be doing well in terms of other opportunities also. An IIT Delhi grad, NYU grad, coming with so much of experience, having experience of working with entities like Delhi and others. I'm sure the opportunity cost itself of setting up something on your own, vis-a-vis working in the industry or working with a large company, will be very, very high. So, where exactly that drive came from of starting up LoanKuber, and what vision you had at that point in time?
Sure. So, as you said, so I had sort of 10 years of, global markets experience in the US and India. See, what always sort of drives you is is the ability to create a difference, right? So, obviously we had sort of, I was, after 10 years, you're reasonably comfortable in terms of, your financial
Yes,
journey and
comfort is the word. I think it's
right,
just about
right. So it's not that I think at the back of the mind, even if it sort of doesn't work out for 3 4 years, you'll be still fine. But that sort of opportunity to create something which is beyond yourself, which sort of builds an you build an institution. So I think that was the main driver. Uh, yeah.
no, very interesting. And as we see today at IPV, when we fund founders, right? the biggest challenge is one, the kind of stakeholders that you have to convince in your journey, right? It's not only investors. I
Right.
mean, contrary to the popular belief that success is about raising a funding round, but I mean, who better than you to say that it is far from that? I think it's your clients, your own team, right? Your family when you start initially.
Right,
There are a
right,
lot of
right.
things that you believe in. So I think kudos to founders like you who have really been able to kind of give up that opportunity and start something like this. So definitely great, and definitely India needs more entrepreneurs like you. Uh, the ecosystem can largely benefit from that, right? But overall, in terms of the sector, just coming back to the business again, how do you see the opportunity growing from here? Right, the asset class that we are looking at, the market that we are looking at, where does growth from LoanKuber come from here? More products, more geographical expansion. What exactly is the growth path for LoanKuber, say, in next 5 years?
Yeah, yeah, no, no, absolutely. So in next 3 years, we're planning, in 2.5, 3 years, we're looking at about 10x growth from here. I think combination of three broad sort of strategies. One is deeper penetration into the three states that we currently operate in, which is Delhi, UP, Haryana. The second, we're also looking at sort of, as you said, geographical expansion into neighboring states. So in fact, in November, which is next month, we are setting up a couple of branches in Rajasthan, and before end of this financial year, we'll be expanding into Madhya Pradesh as well. And third, slightly sort of higher or increase in the ticket size. So currently, our average ticket size is about 4.5 lakhs. We'll probably go up to 5.5, 6 lakhs, about sort of a 20% increase in the average ticket size. Deeper penetration into the micro markets that we've already perfected our underwriting in, and then geography expansion into the other states. So I think by March 28, we should be at 1,000 crore, I mean, and easily 10x from here.
Great, great. It gives me a lot of confidence as an investor, and obviously I'm excited to hear these numbers. So you are in a business, Saurabh, where money is the raw material, right?
Absolutely.
If we put it in that sense. And now obviously money comes from either equity or the debt. We have spoken about the equity part to a certain extent before I take it up in detail further. But take us through the debt aspect of the funding, right? So in terms of the overall co-lending part of the business, tell us about how has the ecosystem again evolved from 10 years ago to now. How are these co-lenders actually looking at players like LoanKuber in the overall value chain?
Sure. So, co-lending is like instant securitization, right? And then asset-backed businesses, which is, where we go out 7, 8 years in tenor, that helps you get match maturity funding, which, minimizes the ALM, the asset liability mismatch. So that's really important because, on the other NBFCs, you have to sort of constantly run very intense treasury operations to keep on rebalancing, your short-term debt. So at early stage, co-lending was an integral part of our liability strategy. Helps us to grow with sort of optimizing our dilution as well. So raising prudent equity as and when required, rather than raising large amounts of equity and short-term debt. So that served us really well. I think co-lending overall, obviously, there's been some flux in terms of guidelines, etc. But I think it's mostly settled now. The regulator RBI had certain reservations about risk participation in co-lending. But I think between two regulated entities, so if you have an NBFC license like us, and co-lending with larger banks or NBFCs is, I think now it's sort of fairly settled in terms of regulations. So I think that will continue to be a significant part of our liability strategy.
Great. And thanks for segueing me into the next question. You spoke about regulations. You are part of an industry which is highly regulated, and rightly so. I think, again, credit to RBI, the central bank, because of which today I think our financial governance and overall the fabric of the country with the faith around the banking system is so strong. Credit to them in terms of regulating it so well, monitoring it so well. Right? But being in a highly regulated industry, what do you think? Does it take away any of your flexibilities in terms of driving business? Anything that you think that can be done differently to promote this industry and to grow it further? Or I think the current regulations are just about right built over, effort of yours and looking at several examples also.
Right. As you said, I think the regulator has done a tremendous sort of a job in the current, given the state of the global markets. That's been happening over last decade or so. I think what they've now come up with is a tier-based regulatory framework where until you achieve a certain size, it's sort of light touch regulations. You're sort of bound by the prudential guidelines. So obviously,
Right.
You have to be executing under that constant sort of scrutiny. And as you become sort of systematically important, once you cross 1,000 crores, then you're almost regulated like a bank. Right. And I think which is sort of the right way to do it, because, at early stage, you're, setting up processes, etc. But we have been, absolutely sort of, we've been operating, even at 100 crores, we've been operating like, we're a middle layer NBFC. So we're following the similar guidelines, practices, as if we are, 1,000 crores sort of a AUM NBFC. I think that's important
Sure.
at an early stage, because otherwise that sort of shift, the transition, then, causes a little bit of a chaos. So, but I think probably, I think the regulations for, I think to second part of your question, I think perhaps for non-NBFC, which are the, the fintech players which don't have NBFC license,
Right.
I think they're a more sort of a lenient, supportive kind of approach would have helped, grow that segment, because I think there's been some uncertainty around that, and that sort of impacted the business models of, players like Slice or other BNP
Sure.
players. So I think so. If you're an NBFC, then I think I think it's fairly settled in terms of regulations, but more sort of a slightly liberal approach towards non-NBFC fintech would have helped grow that segment. But
No, great.
again, that's sort of
But I'm sure I think they are also progressive in their
right.
thinking. There might be some time lag in terms of actually bringing about these changes, because
Right.
obviously given the large population, the large canvas, and the overall
Right.
systemic impact of all of these changes,
Right.
they might be a little slow in adopting this, but steady. I think that's what we have seen in the overall growth. So talking about the business again, and now I'll shift to the customer side of it. Right? So as per one report, there are almost 22 million households which lack access to mortgage housing.
Right.
Right? What is LoanKuber's approach in reaching out to these, identifying the right set of borrowers? Right? Because it's not only about reaching out to these borrowers, but it's also about identifying and having the right credit checks also. So, what's our data-backed approach to drive the funnel
Right.
and to have a book which is very healthy?
Sure. So, what we essentially sort of, communicate to team as well, that, essentially we have to combine data science with lending sense, right? The central tenet of the policy is to only lend against self-occupied residential property.
Okay.
And that's, the backbone that's really served us really well. Even, during pandemic, the NPA has been, consistently around 1%, right? So that's a model we have not deviated from. But we've, built a credit model which helps us identify the self-occupied properties, right? So what we do is we triangulate multiple government databases and use our credit model to determine whether a customer is staying in that property, right? And that happens in minutes, without any physical sort of a manual intervention. So the go no go decision, which other NBFCs or housing finance companies take usually some few days, we are able to crunch that in minutes and then sort of communicate that to the customer. So so that's really been a differentiator in terms of driving the TAT and driving the customer centricity.
Interesting. And since you spoke about technology, I think as a VC, it's almost my fiduciary responsibility to use these words in any discussion, which is AI. Right? I think
Yeah.
the whole world today thrives around artificial intelligence and its use cases. So, how at LoanKuber we are leveraging the AI capabilities in refining our credit mechanism or refining the overall business model.
Right. So the triangulation for self occupancy, essentially backed by. So what we've done is built a sort of a in OCN. So once we got the property documents, we are able to extract the address from the title deed. Right. So it's a combination of AI tool and OCR. And then we map it to the KYC documents. We map it to the address which is on the Berosco. We map it to the documents that we get for possession proof, which could be a utility bill or electricity bill or gas bill, right? So that's where we are able to predict with a reasonable, I think more than 90% accuracy, whether the customer is staying in that property. And that in most traditional NBFCs involves multiple working with sort of law firms and technical vendors, etc., right? So leveraging AI, we're able to take that sort of decision minutes, which otherwise in a physical diligence construct usually takes few days.
Right.
Right.
No, interesting. And all of this is being done in house.
Yeah, absolutely. Yeah.
That's very
So
good.
it's an engine called Atom that we developed. It's been about 1.5 years now. It's already perfected for UP. So what's also happening is that land records are getting digitized.
Correct.
Right. So I think, and we were the first ones. I think. I mean, not using the precious time to sort of, advertise it, but we were the first ones to actually start extracting data from the land records.
That's amazing.
Yeah, and we started doing it back in 2022. So few macro markets is almost perfect. I think the accuracy is more than 97, 98% now.
Pretty good, pretty good. I think one large area which probably is applicable and is probably the cause of watch out for any financial institution, banks, NBFCs and all, is NPAs. How has been our experience at LoanKuber with NPAs? All the more the reason, especially given the asset class that we are catering to, or the strata of
Customer
society, the customer segment that we are catering to. So, how has been our experience, and what has been our driver there in terms of ensuring the balance between growth as well as making sure that NPAs are not being out of control?
Sure. So as you said, we've the central tenets of the policy. We've been only lending against self-occupied residential property. Been fairly diligent in terms of the LTV and FOIR norms. So LTV is loan against property. FOIR is the fixed obligation to income ratio. So we've been fairly conservative. The second construct is always taking multiple financial co-applicants as part of underwriting. So we don't lend to an individual; we lend to the entire household. And in 100% of cases, we also have a woman applicant. So these two sort of tenets have served us really well. And in terms of driving the growth versus asset quality, so initially the focus has we haven't sort of adopted a growth at all cost strategy. It's been a healthy sort of a healthy growth combined with very best in class asset quality. So compared to the yields that we are, average yield is about 25%. We have the sort of almost the lowest NP in the industry, which is about 1.2, 1.3%.
That's very good. Very good. Now, generally speaking about the sector again, India's mortgage finance to GDP ratio probably will be the lowest amongst comparable, developed economies, right? So, where do you think probably the problem lies, and where do you think the scope for improvement is, and how is especially LoanKuber fixing this, right? At when we look at our business.
I think fairly complex. I think there are whole sort of socioeconomic cultural factors. So I think whole slew of factors. So combination of a trust deficit until RERA came in with sort of the smaller builders. There's always been a parallel economy, in real estate, right? So
Sure.
that sort of, and then obviously slightly less propensity to take on debt in terms of households.
Very well said. I think that
So
the risk aversion,
the
which
risk
is
aversion, right? So that those are the sort of socio-economic factors. But I think in terms of the development of financial markets, which you're referring to, I think one is obviously the lack of assessing creditworthiness, which is precisely the gap that LoanKuber is solving for near prime customers. So in the US, the near prime market is larger than the mainstream mortgage market. In India, it's a fraction of that, and it's primarily lack of ability to assess the creditworthiness of the small businesses which need mortgage finance. Also, I think the second factor in terms of financial markets has been that the yield curve has been fairly. Yield curve is a term structure of interest rates,
right.
which has been fairly high. So 8, 7, 8, 10%. If you look at developed countries, it's usually about 1, 2%.
Correct.
So that sort of eats away into the free cash flows that are available for a middle income or a low income household to serve the mortgage debt. So I think so. These are two largest factors in terms of financial markets. So lack of ability to assess creditworthiness, which is exactly what we're solving at LoanKuber, and consistently high yield curve compared to developed markets. I think, but over a period of time, I think, I think it should go to sort of mid. I think it's about 10, 11% now, but I think in next 3, 4 years, we should be at sort of mid teens in terms of mortgage to GDP.
Sure. Great. And one more area probably which has been something that's been the graveyard of a lot of financial institutions is fraud. Any such instances that we have seen, or any such systemic challenges that we see in this sector when we talk about the ownership of the property or the actual occupation of the property and all, what exactly plagues the growth in this segment for players like LoanKuber?
Right. So I think that's in our segment. I think that's a significant. That's precisely the risk. So if you're taking the self-occupied house of the customer, the loan will never go. The intent to pay is never a question mark, right? So where I think you could have some delinquencies there where there's been instances of fraud in terms of the person giving you documents which do not belong to that, and sort of. So what is helping now is that we've very early on have a process which is data backed, as well as before the underwriting, we also do the physical diligences, right? So out of about 2,200 cases that we have, it's been a handful, about 5 or 6 cases which we came across, which was an instance of for either business not belonging to the customer or the property not belonging to the customer. But I think with the combination of data backed underwriting and prudent sort of physical diligences, those can be minimized to a large extent.
Great. And any instances that you have faced during the journey which kind of help you identify more areas of risk, and how have you been plugging those? Has there been any practical cases like this?
Yeah, I think so. Again, we sort of have a portfolio recredit. So what you see is, in terms of cases, there's sort of a kind of a pattern.
Okay.
So when you operate in sort of informal income, and where the assessment is based on the cash flows, you have to be very precise in terms of lending the right amount to the customer.
Right.
I think, and that's sort of evolved, and we perfected that.
Agree.
So you look at surrogates to estimate the income. So earlier we were, I think 2021, 22, our average ticket size was about 7.5 lakhs, where which we have sort of come down to 4.5, 5 lakhs now, based on perfecting and refining our underwriting. So the key is to give the right amount to as long as you're within 5-10% range. If the income eligibility is for 5 lakhs and you've given 5.5, 6 lakhs, it doesn't go wrong. But for 5 lakh customer, the moment you get 7.5 lakhs, so that's where you slightly the delinquencies start to increase.
Agree.
So that's critical, and that's being perfected.
Great. So Saurabh, in my own journey as an early stage VC for more than a decade now, even in this short term, I've seen the overall lending space evolving multifold, right? So starting back in 70s from the era of only public sector banks, we had then private sector banks, we had payment banks, now small finance banks, wallets, right? And now there are these fintech platforms, which are either unregulated or semi-regulated, but a lot of them have come up with novel ideas and are also working closely with other established regulated players as well. How do you see the innovation in this industry innovating, and any examples that you would like to give us that we are probably implementing at LoanKuber in this direction?
Yeah, so obviously, I think fintech is probably the space where we'll see, perhaps the most, innovations either on payments or sort of a lending. Uh, so mortgages, what I think the innovation that we're doing is more in terms of our ability to to identify and underwrite the collateral, which is until now, or even in banks and large NBFCs, fairly physical. To a large extent, it's physical. We are probably the first ones where we started with a digital data backed sort of an approach in terms of underwriting the collateral. That we've, as you said, perfected in the micro markets that we've been operating in last 2-3 years, and we're replicating that in other states, Rajasthan and MP, that we'll be entering into. But
So Saurabh, I think we spoke enough about the economic aspects of the business. I also want to touch upon something which is very, very important in India's context, is the emotional aspect of this business, right? You are again in a segment where people mortgage their self-occupied house property, so there is a certain sense of attachment to it, and you're solving a problem for people where you help them provide finance to grow their business or for any other household needs. How do you see the social impact aspect of the business that you're doing, and how important it is in the overall scheme of things for you as an entrepreneur?
no, that's so impact. I think that is central to LoanKuber, is to our existence and how we do the business. And I think it's very synergistic. See, what you've seen is, for example, to give an example, we set up what we call a pink branch. So that's a all women branch.
Very good.
Where we're setting up it in Jahangirpuri, which is next to the Zatpur Mandir. So what you've seen is, that wasn't set up for purely from a commercial intent. But I think what you've now seen is that has the lowest delinquency compared to our other branches. And, and we sort of debated internally. I think the primary reason was that, the women, when they go onto the field and then, they lend to, the primary driver was to help, a low income women sort of augment their cash flows. And it wasn't purely from, generating the maximum sort of business from that micro market, etc. But that has turned out to be the lowest debt. So there's not a single case which is, delinquent in that branch. And that's been the key learning. And compared to other branches where, that were driven both in terms of business volumes, sort of month-on-month targets, etc. Though there's a delinquencies are slightly higher. So that's a big learning, and that's really opened the eyes. That if you have the right sort of motivation, that will translate into the best-in-class business metrics as well. So
No, pretty interesting experiment, and I'm sure I think this prompts even other entrepreneurs to come up with more such initiatives. Pink branch, you said.
Right.
Amazing.
So every single employee is women. They go onto the field, they do the credit with assessment themselves.
And you see better results out of it.
Yeah.
That's very exciting. That's very interesting. Great. So I think another related point over here is the financial awareness. I think while it has improved over last decade generally in the country with so much of information available, with technology, with smartphone penetration, internet kind of spreading, where do you rate ourselves as a society in terms of understanding these products, making the right decision, right? Going for the right sort of product when it comes to taking a loan, right? And across the asset classes, making right choice of what suits you when you are trying to take a loan for your business, maybe a short-term working capital or long-term loan. Also, in terms of overall financial awareness, is the lending ecosystem doing enough to impart this awareness, or you see people kind of playing to the borrower's ignorance?
No, I think there's a lot to be done, especially in the segments that we operate in, which is about 70-80% of the overall lending market. So while there's been a growing awareness of the Barrow scores and how sort of simple derogue civil can impact the chances of raising future borrowings, etc. But there's the mis-selling is blatant, right? So these
Oh,
are
is it? Okay.
yeah. So these are kind of Chinese or Russian apps where there's sort of see, in mortgages what happens is it's not a push product. So there has to be inherent need.
Correct.
So the mis-selling is sort of to that extent significantly reduced, because customer will not put his self-occupied property on the block unless he has a pressing need.
Correct.
Right, but in the other segments where you're creating the sort of need, whether consumption for travel, leisure, etc., that's where the mis-selling is blatant. And I think there's a lot RBI it's taken some very stringent measures, but there's a lot to be done there as well.
No, totally agree. Totally agree. I think there is still a lot of awareness and knowledge
To be imparted to the
to be
customer.
imparted to the customers as well. What's LoanKuber's DNA in this ecosystem, and how do you think we are different from our competitors? Right, there are other lenders as well. There are other NBFCs as well. When you are in this market and have such growth plans, what's your message to your team when they think about growth, when they think about customer service?
Right. So, as we said, we are focused, we perfected, we created a right to win in in one single product in a specific ticket size. The market obviously is not a challenge. So having perfected it, we are, going deeper into the micro markets that we operate in, expanding into further states. So I think the internal directive is to grow 100% year on year with sort of a very healthy profitability. So I think next year by FY26 we should be double digit in terms of ROEs. I think conservatively around 15% ROEs.
That's great.
So that's been the that's been the internal direction, and obviously lending is markets where you can do decadal compounding, so you can compound at these healthy growth rates for over a decade, which is very there are very few opportunities like that, and sort of
Sure.
even if that sort of in compounding is the eighth sort of wonder in the world, right? So 70-80% compounding over 10 years is like 70x.
Huge,
So
yeah.
so it's few markets where there's opportunity for decadal compounding at with very healthy profitability. So
I'll note
that's
this line. I think compounding is the eighth wonder of the world. When we pitch to our investors and all, this is
Yeah.
something which is so true, where people really don't understand the power of
compounding.
That's phenomenal. Saurabh, fast forward 2030, as we look at India growing amongst the top 3 economies in the world, where do you see LoanKuber standing in overall scheme of things? And another perspective that I want to bring with this question is capital markets have evolved a lot, right? So we have various platforms like not only Mainboard but SME and other areas where raising capital, there is enough access for good businesses, for good entrepreneurs. Where do you see LoanKuber 2030, and what's the vision? When we talk about investors or listing.
Right. So in terms of AUM, as we said, right, so 2008, it's about 10x in 3 years, so about 2028 reaching 1,000 crores, and then I think next 2 years, even at sort of a similar growth rates, you should be at closer to 3,000, 4,000 crores of AUM. But I think the planning is for providing an exit. I think maybe 4 years from now through a public market listing. So it doesn't not necessarily till 2030, but could be earlier. Could be earlier as well. So in our segment, I think around 1,500 crores is which is become fairly IPOable, and
Great, awesome, Saurabh. In throughout this journey, what's been the top three support system that you enjoyed. I'm sure you would have a lot of mentors, a lot of people who have had influence on you when you started up and when you now look at growing the business. So, what's been your biggest support system, apart from family? Somebody who has been driving you on the business front or on the overall entrepreneurship front?
Yeah, I think so. Except so family, of course, and then network of sort of the IT friends, and obviously yourself. You've been working very closely together for last 3 years, and I think we share a common vision of with a healthy growing with a fairly healthy growth rate, maintaining profitability, asset quality. Uh, so I think and a couple of my ex boss who's now Devesh, who's now on the advisory board. So yeah, I
No,
think
great, interesting. And I really hope you will be the support system for a lot of upcoming budding founders. As we at IPV also kind of really look at this sector with aplomb, and we think that there is still a lot of growth yet to come with a lot of new business ideas in this sector. So we definitely lean on you for your expertise and guidance to them. So great,
no,
and
sure,
thanks
sure.
for these.
Yeah,
This,
no, I think we're privileged to give back. I think that's the way you give back. I think once you've
no, awesome. And
yeah,
as you mentioned about the IIT community as well,
right.
I'm sure it's an ecosystem where
Yeah, it's a
you
phenomenal
take guidance, you pass the
ecosystem.
guidance, and you
Right,
help
right,
each other. So that way it's quite strong.
right. Yeah.
So Saurabh, I think so far in our journey together of 4 years, we've always had only serious talks. Now today, since I have this platform, probably I'll try and kind of pull your leg with some rapid fire questions. So please bear with me, and I think we'll just kind of invoke a moment of laughter maybe. So few rapid fire questions. You don't have to think, and you have to answer really rapidly. So first question is, if you could have any superpower, what would that be? Saurabh is a simple man. He doesn't need any superpower. I think he would rather kind of continue to have his business and
Right.
drive it the way it wants. Yeah, so common man's guy. And knowing you, I think I can answer on your behalf. Best advice that you have ever received?
I think to build a business with the right fundamentals. I think not chasing the vanity metrics.
Very well said. I think in today's world, especially with people just kind of chasing growth at the expense of profitability, I think this
Right.
is something that really need to be imbibed by every founder. You're a morning person or a night owl?
Morning.
What's the one skill that you think every entrepreneur should have?
I think persistence.
Correct. New Delhi or New York?
New York.
Seriously?
Yeah, you miss the city here.
Coffee or tea?
Coffee.
Great. One thing you can't live without?
Wife and kids.
I guess so. The most frequently used app on your phone? And don't say WhatsApp.
it's
Beyond WhatsApp?
uh,
Can't think of
I
anything.
think-
So you're not a content person, you're not a tech-savvy guy in that way.
yeah, I mean, fairly simple.
Very simple.
Yeah.
Your favorite meal, your comfort meal?
Rajma chawal.
Not Indian, huh? Great. And what does a typical Sunday look like for you? First of all, I hope there is a Sunday and you switch off and think beyond work as well.
Yeah, half a Sunday. So
Half a Sunday. So half a Sunday you're working.
Yeah, so it's.
Entrepreneurs, this is for you to listen.
I think so. Partnering time with the kids in the morning. Sort of, we go for a walk, or we take the older one for a sport, and then some work in the afternoon, and then watch a movie with wife or something in the evening. So
Great.
so the partnering time is important. That's the only day you have.
Sure. One entrepreneur, actually, let me put it this way: one Indian entrepreneur and one global entrepreneur that you look up to, who are you idolize.
I think Indian would be Sanjay Agarwal from AU. I think built it from scratch. And then I think globally would be sort of Elon Musk, right? Is sort of phenomenal guy.
Amazing. And I know you've just been back from a short holiday break. Your favorite holiday destination?
has to be Goa. So
Great. Thank you so much, Saurabh. It was awesome having you on the show. I'm sure there is a lot to learn for our audience from this session. A lot of takeaways, and yeah, for the budding entrepreneurs, Saurabh is always there to help you out in case of any guidance required. And in case you need a good investor, we are there for you. So do not forget IPV, right? And we are here to bring many more such stories, such inspiring instances for your benefit. Thank you so much, Saurabh. It
thank you,
was great
Mitesh.
having you on the show.
This is lovely. Thank you for having me here.
So, Saurabh, in cherishing this memory of spending this time with you, having this amazing words of wisdom from you, would be obliged if you can just sign this paper for us.
Sure,
And
pleasure.
Thank you so much, Saurabh.
Thank you.
Thank you. I know you're a man of few words. Probably this is the longest that you would have spoken to anybody, and thanks for giving me that opportunity.
No, pleasure.
This is just a small
Thank
gesture
you.
of appreciation from our side. Look forward to work with you for many
Absolutely.
more years to come.